Assume everything is good and we are live. So, what's going on, everybody? This is Jay Davari. I am a new trader, and welcome to the first episode of my D.N.T series. That's my Diary of a New Trader series. So, uh, basically, I just wanted to create a series of live streams documenting like my progress um, this year. I really want this to be like a just like like my own personal journal, and like I'm just inviting everybody along for the ride, just showing you um what I personally do, like how I look at the markets, the things that I've learned. I've learned a bunch of different concepts from like ICT, and I've learned a bunch of different concepts from like other traders who kind of like use some of his content, and they kind of made it their own model. And so, like, with the accumulation of things that I've learned over the past couple of years since I came across ICT and the other traders who also, use his content, I've sort of developed my own personal model. I've made tweaks to the one to some of the models that I've seen other ICT concept traders on how they do it. So, um, this is basically just gonna be me, just documenting everything down to like my market analysis, the trades I'm looking to take for the week, and also too kind of like some of my personal goals. I don't mind sharing that with y'all either. Like, um, one of my personal goals again is for this year is to get funded. I got funded last year with a futures prop trading firm, but I ended up losing the account after like one trade. And I'm pretty sure I'm not the only one that's happened to before. So I'm pretty sure we can all relate to that. So, um, but yeah, my goal is I definitely do want to get funded again with a futures prop firm. And also too, I do also want to get my Series 3 license. For those who might not know what that is, the Series 3 license is basically a license to trade futures commodities. So like futures, equities, futures, commodities like metals, natural energy, even futures currencies. Well, that's a separate license in itself, but it is basically a license saying that you're regulated to give like actual investment advice when it comes to the futures markets. So that is something that I'm also working on this year. I look to go ahead and take those exams maybe somewhere in like March, and just get licensed, and then I'll really be able to like actually well, legally, give actual investment advice, because that is something that I personally do want to do. Um, as far as like educating people on like how they can make money in the markets, and how I can. That's just my goals and how I plan to like start a business around it. You know, uh, I don't really hear too many traders, talk about doing it that way. Mostly everybody I see, they just have a platform on YouTube and they just, give education with their disclaimers. But me, I kind of want to take it a step farther. And, who knows, like, once we learn this skill, it's just like the income possibilities are endless. Like, even if it takes a bit of time for me to like get my own business going, I can also go work for like say a wealth management firm. I can go be a CTA, which is basically a commodity trading advisor, and then I can like put all that together and make a business out of that. So uh learning this skill, and then getting certain licenses, that can also put you in different rooms. You know what I mean? So um that's personally what I am looking to do for this year. And yeah, y'all, I'm just looking forward to documenting this journey and sharing it with everybody. I don't mind sharing it with people, and I really just want this to be something that people can relate to. And I also, on my own behalf, I also have to agree to be consistent in documenting that process, and putting everything forward so that everybody just to help anybody out there who may just be getting started and maybe struggling. And for anybody else who out there who maybe just been doing it for a couple of years but haven't really found consistency, I just want to show people that like like we all go through it. We all have our struggles. We all have our ups and we all have our downs on this journey and in this industry. So uh yeah, I just hope that I can be eventually be like another voice and like another form of inspiration to other people who may really want to do this but don't know how to get started, don't know where to get started, or maybe they feel stuck in their journey. You know what I mean? And that's the thing about journeys. They don't always have to have a sudden destination that they reach. Sometimes it can take 2 years or 3 years or 5 years, 10 years even. So um, yeah, man. So without further ado, y'all, uh, welcome to episode 1 of my D.N.T series, Diary of a New Trader series. And I just shared with you guys my goals. And now I'm gonna go ahead and get into some basically chart analysis. Um, I don't really plan on trading per se this month. Uh, I personally want to wait until February, because I normally in January there isn't too much volatility uh, in the markets, at least from what I've learned and what I've heard, kind of because like all the big investment banks and fund managers, the guys who really like put like huge amounts of funds into the market, they're basically spending this time right here to like basically just plan out their goals for the year, and also too based off of the economic calendar, based off of what I've seen, there hasn't really been too much volatility or volatile news events, especially coming up this week, because this week, January 9th, there's um, supposed to be basically observing the death of Jimmy Carter. Jimmy Carter was one of the U.S. presidents. He died recently, so they're supposed to be observing that as a national holiday, or as a national day of grievance, for a former U.S. president. So, not sure if that's gonna provide, if that's gonna slow down volatility in the markets because that's going on. So yeah, just as far as right now, I want to wait till February, but I will spend January kind of like just analyzing the charts and just seeing like what opportunities I can find going into February. So with that being said, we're gonna go ahead and hop into it. Get rid of this right here. So this is my trading view. I actually have the TradingView app because I used to have it on my browser in Google Chrome, but for whatever reason, uh, all of this over here on the browser, it just disappeared, and I couldn't figure out how to get it back appearing over here. All the instruments that I trade, these are my indexes, and as you can see, I got the contract months right here, indices, commodities. I haven't put currencies back on here yet, but I plan to put them back on here. Then I got my crypto. I mean, I just look at crypto. I don't really trade it too much. I just look at Bitcoin and Ethereum really. But yeah, so I just went ahead and downloaded the actual TradingView app to my desktop, and then voila, everything was here. So, and I just been rolling with that ever since. So, right here we have ES. We have ES. And actually, this right here is a continuous contract. I'm gonna just mark up on the continuous contract. Right now, I can go back and do the other markups later on the actual like contract months. The reason why I have it like that is because the futures prop firm that I was trading with, they didn't allow you to trade with the continuous contract. It wasn't one of the instruments that was allowed, so they wanted you to basically use the contracts that have the actual expiration months, right? So as far as right now, I haven't seen one for January for any of the indices. It's really the March contract. This H right here, that means this is the contract for the month of March. So I'm just assuming that because again, I'm pretty new to trading futures, so I'm just assuming that from now all the way to March, we can basically just trade off of this contract right here and make executions off of this contract right here. Also the reason why I didn't want to mark on the contract month right now is because of these gaps here that are currently on the contract. So right now, just for like technical purposes, I just want to mark on a chart that actually, has them all grouped together so I can like more clearly see, like what I'm looking at. So as far as right now, actually, let's go ahead and also look at the calendar. Right. So right here we have Forex Factory. I'm pretty sure every new trader and even the traders that have been trading for a couple years, we all know about Forex Factory, right? So, uh, as you can see right here, Monday we don't really have any volatile news events going into Monday's trading. But remember, I also said that we have a National Day of Grieving for Jimmy Carter in the U.S. So we might see early volatility starting in Monday, even though we don't see any red folder news events going into Monday. We still might have some type of trade volatility, due to the fact of like on Thursday there isn't really any type of high impact news going on. So all of the weekly volatility may happen earlier in the week. So starting Monday, and Monday for my strategy, Mondays is basically when I kind of like sit back anyway, and I just analyze and see what happens. Okay, based off of Sunday's opening price, did we open higher or lower? And also, do we have if we open so based off of the if we open higher or lower, do we have like any sort of like inefficiencies or like premium or discount arrays that are resting below or above Sunday's opening price, depending on what type of direction I'm anticipating price to head towards. Um, so yeah, Monday I normally take a seat back. Uh, Monday night is when I actually start to look for executions going into Tuesday morning's London session. And as you can see right here on Tuesday, we have a couple of high impact news events going on at 10 a.m. And then on Wednesday, we have a couple more. We actually have crude oil inventories, and then we have the FOMC meeting minutes. That's where the Federal Reserve, they're going to be talking about, I guess, giving any updates on the economy, where they see the economy, where they want to inflate, if they're going to be striving to cut interest rates again, or basically just trying to get back to their inflation target of 2%, because they really hammered that all last year in 2024. They're not going to stop until they get back to 2% inflation, get back below 2% inflation. And I think right now we're hovering at about around 3%. So definitely it's anticipated that they may be doing more federal rate cuts, because they actually towards the end of 2024 they started doing their first set of rate cuts they started doing their first set of rate cuts since they started doing rate hikes back in 2022 and up to 2024. So for the first time in like 2 years, they actually started cutting rates, and we actually started to see some downward movement in the market. So with that being said, I'm expecting some volatility on earlier in the week, especially on Tuesday and Wednesday, and we even have some stuff going on Friday too. Well, that's for the Canadian. We have non-farm employment change, unemployment rates, and let's see. This is basically NFP, right? Yep, NFP, non-farm payrolls. Yeah, this is definitely gonna be a volatile week going in. What? Hold on, because NFP should have been last week, because it's always the first Friday in the new month. It should have been last week. Let's take a look. But you know what? Okay, so they probably changed it due to the holidays, because last weekend was the start of the new year. So okay, that makes sense why they probably moved it to this week. So normally the week. So now that I've seen that, so normally the week of NFP, I normally try to be out with my strategy, my entry model. I try to be out around either Thursday, because come Friday, it can be, if I'm still holding the trade by Friday during the week of NFP, there's no telling what can happen. It can kind of whipsaw all over the place, and I try not to be involved on Fridays, the week of NFP. Even some, I mean, shoot, even some weeks I just don't trade NFP week because uh, that week earlier in the week it could just be pretty volatile and it can whipsaw a lot. And I may anticipate one thing to happen, but hey, something else can happen during weeks like this, especially with volatile or high impact news events such as this one in particular, right? So uh, that being said, I'm gonna go ahead and get into the charts, but also too, I also have the commitments of traders up right here. I normally only use this if I'm interested in like looking for positions on like the metals and also with oil and natural gas. I'm probably not gonna look into oil and natural gas right now, but it's definitely something that I can um, add to the list to just have on my radar. But as of right now, we're gonna go to the short format for the metals. Actually, nah, we're gonna go to the long format. I think I prefer looking at the long format more, honestly, if it comes up. Let's see. So trader, this is for silver. All right. So right here for gold, but for silver, my bad. So where's gold? This is platinum, palladium, platinum. Okay, so right now for silver, I mainly only focus when you read the commitment of traders report. The only thing you really want to focus on is the managed money, because the managed money, this is going to be the banks, the investment banks, the hedge funds, basically like those like the bigger players in the market, right? Other reportables right here. This is basically just like say the smaller retail, uh, maybe organizations, you know, and hell, it could even be us as retail traders, just or the non reportable positions. This could even just be regular retail traders that may have bigger account sizes, and yeah. So, but mainly I just focus on the managed money because these are the basically like the heavy hitters. Like these are the big fish, and in our instance, or in our case, we're the little fish. Um, so as we can see right now, it's as far as like December 2024, because I think that these reports only really come out, and feel free to Google this, right? Because I don't know for sure, but I think that these reports um really change. I want to say towards the week before the month ends. So right here, this is December 24th, 2024. So I want to say the next set of updated reports will probably come out like late January or like mid to late January when we'll see another report come out. But as far as right now on silver, most of the hedge funds and the investment banks, they're long on silver. Most of the reported positions that we have, uh, they're mostly long on silver, right? So we have 39,531 um, long positions and 18,983 short positions. So looking at this tells me that I kind of want to be on the side of the big fish. They know something that we don't. They have access to way more data that we don't. Um, Also, they have thousands of people constantly doing reports, running analytics, and all that of the sort. Right? They just have so much more information available than we do as a singular retail trader. So, um, yeah. So this tells me that I kind of want to be more so long, uh, have more of a long term view on silver, or have a bullish view on silver as far as right now. Even for gold, as you can see right here, for gold, managed money, 186,099 positions long on gold, and only 20,000 positions short on gold. Um, as you guys can see right there, they're really long on gold. So, like I said, these funds, investment banks, they have they have access to way more information than we do, and they even hire people to do things like that. Let's and they even hire people to run analytics on and just collect data, from anywhere, any different type of sources before they make their investment decisions. Right. So that being said, any markups I do on gold and silver today, I'm gonna have this in mind. I'm gonna have a bullish bias in mind, based off of the data from last month in 2024 of December, and that's subject to change as the next set of reports comes out later this month. Either later in the month, maybe like the third week in January, or maybe even next. I doubt next week, but maybe like the third week in January, right? We'll have a new set of data, and then we can even still that'll determine if I shift my bias or not. But right now, just based off of these numbers, I'm having a bullish bias on gold and silver for right now. So now with that said, let's go ahead and hop into the chart. So as you can see right here, I have both the ES futures contract, and the NASDAQ. So we have the NQ and the ES right here side by side. The reason why I have them side by side is because one of the entry criteria, or one of the indicators that I learned from ICT, it's not really an indicator, but it's more so like a confluence, called the smart money technique, the S&T. If you're anyone who's familiar with ICT concepts, you've probably seen other traders. One guy that I know of, his name is TT Trades on YouTube. I basically learned more about it through him, and I even watched some of the older ICT videos that ICT himself has on his YouTube channel. So if you guys want to go check that out, feel free to go to ICT's YouTube channel and basically just look it up and study it for yourself. Take notes on it yourself. Don't just go by everything that I say about it. Because I might be leaving out information. There's also a guy named Sniper. He also uses it in his when he's analyzing the market and determining, like, okay, where should he basically what direction he should be looking to trade in. So yeah, that's why I have these two charts side by side. And just a quick rundown of what S&T is. S&T, or the smart money technique, is basically just what's the word? I already said confluence. What's the word? Crap. I can't think of the word right now. But when it comes to me, I will definitely share it with y'all. It's a divergence indicator. So like basically it's just not really an indicator, but it's just like it just shows divergence in the market, because these two assets right here, the ES and the NQ, they should be correlated. They normally have a correlated relationship. So that means that if the ES is heading higher, the NASDAQ is also heading higher. Even the same for the YM or the NYM, whichever one, if you're using the micros or just using the mini contract. But these all three of these indexes should be moving in unison with one another. And so like say that ES and NQ, they both made higher highs, right? But say that US 30 or the YM, say that instead of making a higher high, it made a lower high, right? So that right there it indicates a divergence in assets. That tells me that there's some type of institutional sponsorship that's going on in US 30. And remember I said that these assets, they all have a correlated relationship, so they all should be moving in unison. The fact that one of them didn't make the same higher high that the other two indexes did, that tells me that pretty soon both the ES and the NQ, they're both gonna soon basically change direction. So although US 30 may be the first one to actually start hitting lower or start selling off, pretty soon at some point the ES and the NQ, they're both gonna also start selling off, basically depending on if, say, it reached that, say, a PDA rate, say like an old high, right? An old long-term high, like a weekly high or like a monthly high or a daily high, depending on the time frame that you use. So, um, yeah, that's basically why I have these two side by side because I use that as a confluence of helping me confirm direction. So, um, as far as right now on the monthly time frame, I really don't see anything uh that we're close to as far as right now. We have several inefficiencies all the way down here, right? We even had an inefficiency that was already filled months ago because we're on the monthly time frame. So um, for us to get all the way down back to here where this inefficiency is right here, I'm just go ahead and mark it. We have a fair value gap right here. We have a fair value gap. There we go. On a month from a monthly perspective, to get from here all the way down here, this is gonna take months, right? It's gonna take months. So as far as right now, I'm not particularly too focused on what's going on all the way down here. This is where my focus is in this area right here. So the last couple months of December, November, and October, this is the range that I'm looking within right here. So from a monthly perspective, I don't see anything that stands out to me. So basically with that, and shoot, even if I go to the US 30 Dow Jones, if it does it, if it's not bugging out on me. Yeah, so even right here, I still don't see anything that stands out to me on the monthly time frame. At least not close right now, because we see we have that same inefficiency right here, right? So Monday, October 2nd, 2023, we have that same inefficiency in fair value gap. So, and that's why I look for that S&T or that divergence, because as you can see, these indexes, they should be moving in unison because they have a correlated relationship. So, I mean, I'll just go ahead and mark it just for shits and giggles, I guess. But as you can see, the same fair value gap, same inefficiency. To get from here all the way down to here is going to take months. So that's just something that we keep in mind, or that I'll keep in mind as the year goes on. If I'm being realistic, I would anticipate this high to get taken out first, or this high to get traded up towards first. That's what I would anticipate. Especially here on, this is also external range liquidity because this is an old high. This is an old high, so we're going to mark it as external range. Even right here on the YM. As far as I can tell, it's kind of a slight divergence from the monthly perspective, but let's zoom in a bit. No, not really. This candle wick is higher than this one, so not gonna worry about that. But this is also external range liquidity because it's an old high. This is the most recent high right now, at least from a monthly perspective. And also I need to mark this as monthly so I know what I'm referencing and looking at. Also, my style, I'm more so of like a short-term swing trader. Kind of, I look to hold positions at least maybe for a couple of days or so. But being that futures prop firms don't really allow for swing trading, I kind of had to adapt my style a bit. So instead of swing trading or holding for a couple of days, I look to just grab whatever move I can early on in the week because I'm anticipating some type of weekly. Excuse me. I'm anticipating some type of weekly move to happen, some sort of expansion in one direction to start the week. So we got that. I'm gonna go ahead and mark the NQ high, even here, right? Boom, boom. Same. See how all the indexes, they really kind of did the same thing. They all made higher highs. right? Even large wick highs, they all did the same thing. Even US 30, even though you kind of got to zoom in a bit to really see it, but you can see, as I showed y'all earlier, like that this high is higher than this one, so they're all moving in unison, right? Some of the indexes is just a bit more volatile than the other. And that's another thing to keep in mind too when you're trading these assets. Let's see. And like I said, as far as right now, just based off of where we are now in price, I'm looking for this area, you know, to probably get traded to first, right? So let me go ahead and mark it external range. And external range liquidity is just basically an old high, and above this previous high right here, there's some type of resting orders that are right there, right? So, and basically at these areas, I anticipate some type of reversal. That's really all ICT trading is waiting for reversals to happen at higher time frame highs or lows, and waiting for liquid, and basically at those old higher time frame highs and lows, hedge funds, investment banks, anyone that's big money, big fish, they'll have resting orders there, because they can't necessarily just pump a whole bunch of orders in like minutes and seconds, just like that, you know. So put the M right there. So they can't just put all those orders in about a minute, just like that. They have to place them and hold them, and then they'll basically mitigate those positions when they get to those old highs and old lows on the higher time frames. They'll mitigate those positions and then look to basically trade in the opposite direction, because they've mitigated all of those positions. So say right here, there's going to be some resting buy orders here, right? And so basically for them to mitigate these positions, they have to basically sell the market back to people who want to buy it. And once it gets here, those same buy orders, they'll go ahead and execute sell orders, and that way they can basically hedge against the other positions that they had, against the other sell orders that they were given to people who wanted to buy the asset, or buy the asset at this point in time. And basically when they get here, they want to mitigate those positions, so they want to close all those buying positions. And how they do that, they sell them, right? And then basically what they do is now they start entering sell positions above this area, and that's when you see like those reversals happen right here. And they're basically just capitalizing on all that momentum and sucking up all that liquidity that's resting right here. In this case, it's to the buy side, and so they're just sucking up all this liquidity right here, and they're riding the new trend, or the new, whether it's a long-term or short-term trend. You know, just have to look for that in the price action, but they're just riding this momentum all the way down with the new sell executions that they're inputting in to offset all of these buy orders that may be resting here, right? So that's according to ICT. Like I said, you guys are more than welcome to go to his YouTube channel and study the concepts a lot more. I may be leaving out information, you know, so don't always take my word for everything. Do your own research. So there we go right there. So from a monthly perspective, I don't really see anything clear. So now what I'm gonna do is I'm gonna go down to the weekly. All right, so the weekly, I can kind of see it's kind of a bit more clear, right? Not necessarily per se, it's kind of a bit more clear. Currently right now, what I see is an order block right here. So at least on the NQ, we have an order block right here. That's just what I see for right now. Let's see, order block. Order block. You also have another another order block right here. Except this one right here kind of got ran through or traded downward a bit more. However, it's still closed inside of it, right? So we haven't really closed below this order block to really invalidate it just yet. because it's just sitting inside there. And also at this order block, you know, it did the same thing that I see right now. Let's go to YM really quick from a weekly perspective. Same order block, except this one right here got traded through a bit, and we also have a bit of an inversion gap now. So this inversion gap right here is resting right here. So we have an inversion gap right here. Mark this as inversion. Where's it at? I know I have it. Oh, right there. I gotta have it as an acronym. So right now we have an inversion fair value gap on the US 30 index. We also have a few more fair value gaps inside of here on the US 30. We haven't really done that per se on the ES and the NQ. Right, so I don't see anything that stands out to me on the yes, actually, yes, I do. I just found something. Hold on. So we do have this order block right here, and inside of the order block, there's another fair value gap in there, but that fair value gap has kind of been traded through a bit. This is also why I'm not trading in January, because it's not really too clear to me. Wait until I'm gonna just wait till February, but I'm gonna delete that. Delete that. So as far as right now on ES, I see inversion right there. We don't necessarily have inversion on the NQ just yet, because it's still kind of resting inside of it. So as far as this goes, this is still a fair value gap, a regular fair value gap. It may change to inversion, but as far as right now, it's still a fair value gap. It's also an order block. I'm gonna just do it like this. I'm gonna do order block. I'm gonna make it blue, and then we're gonna do order block. Right, we're gonna do the same thing over here. Boom, and we're gonna put order block. The plus just means that I'm marking it as a bullish order block. So as far as right now, this price level. All right, and also let me go ahead and do this. Let me also go ahead and mark Sunday's opening price. Right. So I'm gonna make this red. That's how I normally do it. Put it in the middle, and we're gonna do 1/5/24 Sunday. Oh, shoot. Sunday open. Make it a little bit bigger. 11. Yep, that works. So right now, this is the. Hold on, wait. I might need to move it down a bit. I want it to be exact. 2.5. Yep. So the black is the actual closing price. The red line is where is the price that I should have marked. So I'm gonna do the same thing for NQ. Mark Sunday's opening price. So 493. 493 is the opening price. 493. 0 on the dot. We're gonna go red. Yep. So then we're gonna go 1/5/24. Sunday open. Right. So based off of Sunday's opening price, depending on which way we go, because even right now I still don't see anything on the weekly chart right now. Oh, wait a minute. Hold on. We might have some divergence. Hold on. It's tiny, but let's see what we have. Yep, we have divergence. right here, this external range liquidity from the monthly perspective, this is the monthly high right here, that same monthly high right here. We have ourselves some divergence. So Monday, December 2nd, boom, boom. Yep, we have divergence right here. All right. So as I was saying earlier, from the high, so we have Monday, December 9th, the week of Monday, December 9th to here. Go ahead and mark this as my S&T. Make this a bit smaller. So we're gonna do this like 10. And I'm gonna make this, not the text, I'll make the style. Damn it. I'm gonna make the style blue, red. We'll do red. Red is a lot clearer. All right, so we're gonna do it like that. So from the week of December 9th to December 16th, right? We're gonna do the same here. December 9th, boom, to December 16th. This is the benefit of doing it on lower time frames, right? Because everything might not necessarily be clear on the higher time frame, right? So, boom, right there. So Monday, December 9th, you can see they're both correlated. You see it right there. I'm gonna even mark it up better so y'all can see it. See what I'm seeing. So from here, do it red. Do it red, red. Right. So boom. Actually, no, I don't need to do that. Y'all can see it. Oh, did the wrong thing. Y'all should be able to see it. Yeah, that's a lot clearer. Okay, my bad for trying to make it easier. But at the same high, right? Monday, December 9th to the week of Monday, December 16th. We did not, the NQ did not make a lower low. No, the ES didn't make a higher high, right? It made a lower low, or it made a lower high. Meanwhile, the NQ, it made a higher high. So this right here tells me that we have divergence. So ES is the weaker asset in this instance. So we would look to be short on ES, and we would also be anticipating NQ, both the NQ, so the Nasdaq, and both the US 30 to both kind of follow suit, right? Because even if I go to, so you see Monday, December 9th. Now just Monday, December 9th and December 16th of the same candles, US 30, it just sold off, right? We don't necessarily need we don't need two indexes to do the divergence. We only need one. So in this case, I saw it on ES, and NQ is the only one that basically showed divergence, right? Because both the ES and both the US 30, they both made lower highs and sold off. NQ hasn't. So these are the weaker assets. So if I want to catch momentum, I would trade these. Because the Nasdaq, it may be a bit more volatile. As you can see, like it's still kind of resting in this fair value gap. So the Nasdaq may be a bit more volatile, but so if I'm going to be short, I'm going to be short on the ES, and I'm kind of leaning more towards doing it for the ES. So now that we have that, so now that I have the time frame that I've identified a setup on, or at least some type of weekly direction on, I can either go down to the daily, or I can go down to the 4-hour and look for entries. And I normally do it on the 4-hour. Right, so right here, I'm gonna go ahead and mark this or label it as the inversion fair value gap. You got the inversion fair value gap right here, or the inverted inefficiency, this gap right here. Um, so basically, I'm looking, if it trades back up towards it again, I'm looking for it to reverse and head lower and possibly either take out. So the target would be these lows right here. So this is an external range on the weekly. This is an external range. I'm gonna do shift, weekly, weekly. And I'm gonna copy and paste that, control, click and drag. So this is an external range right here, and this is also an external range. So if I'm looking for any type of short position on the ES, this is where I will look to target first. So first, what I need to see happen throughout the week when the week opens, when we open up in the next couple hours, what I need to see basically the market open on Sunday and take out and make a run above this high right here, right? Because remember I said earlier, the higher time frame highs and lows, that is where the most liquidity is resting, right? So from a weekly perspective, if I can get it to sit right there. So based off of the weekly time frame itself, right? This is where I'm gonna make this a bright color, maybe like pink or let's do yellow. Yep, yellow. So when the market opens up on Sunday, between Sunday and Monday, I want to see some type of run above this high, because that'll tell me there's basically liquidity that's resting right here, right? So once this liquidity gets ran and taken out, I want to see like some type of reversal happen, either most likely at the inversion fair value gap right here, because this is a PD array that can still be respected. In this case, this is a premium array because the market is being bought back up, right, when it's being sold off, right? So this run back up is at a discounted rate, right, because it's being bought back up. So if it opens up and it's being bought back up, it's being bought back up into a premium, right, or back up into higher prices, because it's not being valued less, it's being valued more, because it's worth more than what it is at the 59.85 level. To get up to here, this is basically will be a premium market inside of this range, right? So inside of this range, and actually I'm going to do that also. So from this high to this low, I'm gonna make this the premium discount. Hold on. Nope, that's standard deviation. Good. As a matter of fact, because I said this is a premium to discount, so I'm gonna drag from, because I don't want to invert it, so we're gonna do from boom to boom, right? So from this low to this high, this is our premium and discount range, right? Because this is the most recent high and low in the range, and I'm already anticipating lower prices. Anyway, or that's at least my bias for right now. So based off of that, any type of run back up into here is considered a premium, right? So I would look to sell basically anywhere inside of here, unless proven otherwise, right? Unless the market tells me something different. Like if I see any type of run above here, is most likely maybe gonna run above this external range on the monthly time frame. So unless that happens, right, at least for right now, my mind, I'm shifting towards a short term. In a short term perspective, just from a weekly perspective, just short term, I'm bearish, right? Long term, this may be bullish, or you may switch to bullish. But as far as right now, short term, I am bearish, right? So we get back up into this inversion fair value gap inside of this premium of the range, from the high to the low right here, inside of the premium of the range, I'm looking to sell. So I currently don't need this on here. It's kind of, in my personal opinion, it's just cluttering up. Um, but based off of what I just showed y'all, we already know that this is inside the discount of this range. This is inside the premium of this range right here. So now I'm going to go ahead and go down to the daily time frame. And as y'all can see, we have another fair value gap resting inside of the that inversion fair value gap from the weekly time frame. We also have a larger fair value gap right here. So basically, I look at this gap as this daily gap right here. This gap is basically, this inefficiency has basically been filled, right? So I want to say that we can look at this as a balanced price range, right? Because we have both selling and both buying candles inside of this fair value gap right here. So we can look at this as a balanced price range because there's an equal distribution of sellers and buyers inside of this inefficiency right here. So we can look at this as, we can basically look at this as a balanced price range. Both sides of the market has been delivered, right? So with that being said, if I see any type of run back above this high right here, is most likely gonna make a run for go ahead and take out the external range. Likely, right? Do I know that for sure? No. I'm just speculating, as we all do. You know, I'm not gonna be that person to try to like call the market as it goes. You know, that's 100% not necessary. You know, you don't need to be that type of person, right? So yeah. All right. So right now I'll be monitoring this fair value gap right here. Monitor this fair value gap. Also, too, you're gonna see multiple SMTs. Also, like even right here, we have a daily SMT. So we have a daily SMT with ES and the NQ. You could potentially see multiple SMTs. I normally roll with the divergence from the previous higher time frame. So short term, from a daily perspective, yeah, we can make a run higher, right? But from a weekly perspective, we see I would anticipate lower prices. So the higher time frame is always going to basically overtake or basically trump whatever the next lowest time frame is going to say, because yeah. So from a short-term perspective, from a daily perspective, you know, you can look to potentially look for buying opportunities up to here, but I wouldn't anticipate a run all the way from here all the way up to here in just a matter of days, right? I would probably look to, if I did take a short-term buying position, I would look to probably sell it right here when it gets to this fair value gap that's resting right here. So oh shoot, I have a claim mark. So I will look for it to get to right here. Right, this is where I would look to exit as soon as we get to this fair value gap right here. If I enter a bullish position, right? If I enter the buying opportunity right here, so mark out that S&T for y'all. You can see it right there. Boom and boom. So Friday, December 20th to the 2nd of January 2025, right? ES made a low and made a higher low. Meanwhile, NQ made a low and made a lower low, right? So that's another SMT divergence. So, and like I said, from a short-term daily perspective, you know, you can look to take these, take a position here and just look to close it out right here. Or that's what I would look for, because they can get to here and reverse and head lower and then take out those weekly ranges, those weekly lows that I had marked out earlier, right? So And in this case, ES would be the asset I look to buy. So from that weekly perspective right here, as you guys can see, we got the Sunday opening price, got the inversion gap. We look for it to be traded back towards again potentially, or even this week open up and take out the high right here from weekly perspective. I already showed you guys the daily. Matter of fact, also too that weekly high right there is also inside of that weekly high is also inside of that daily fair value gap right here. So I kind of like another confluence that when we get to here, I'm gonna go ahead and anticipate that reversal, and I want to see a SMT or a divergence inside of this daily fair value gap right here on the ES, and I want to see that happen at the same fair value gap. So Thursday, December 26th to December 30th. So December 26th to December 30th. Yep, we got the same fair value gap. December 26th to December 30th, right? Fair value gap, fair value gap. So I want to see divergence from one of these assets inside of this fair value gap. So I want to see divergence inside of one of them. Take a look at ES real quick. Yeah, so I'm really not. Yeah, it doesn't look like I'm gonna focus on the US 30 because it's not showing the same thing as the other time as the other assets. So this is probably just gonna continue to sell off somewhere. It may get to here and just sell off. So I'm not gonna focus on the US 30. We're just gonna focus on the ES and the NQ, right? Because both of these charts show the clearest amount of price action for me. And if I'm gonna decide to sell either one of these assets, I'm looking at it on this time. I'm looking at it on these charts only, because US 30 isn't showing me anything clear. We had the same fair value gap right here, the 26th to the 30th right here. So, but even then, I'm really unsure about this one. So I'm just gonna focus on the ES and the NASDAQ, the S&P and the NASDAQ. So I'm basically going to wait for the S&T to happen inside of this daily fair value gap right here. Even. Yep. Because we also have the weekly inversion right here. Even if it doesn't trade back, even if it doesn't trade back to the weekly inversion, remember earlier we still have that. It's still inside of the discount area of the range that I had marked up earlier. So I'm gonna go ahead and I'll just put it back on here for now. So inside of that same range, this is still in the premium of the range. So I will look to sell anywhere inside of here. Particularly, I want to see S&T right at this daily fair value gap on both. Right, and I can show that to y'all. I can show y'all an example of that later on in the week as when we open up for market open. So now from a 4-hour perspective, I can't really do anything from a 4-hour perspective right now. This basically, I could just give you guys like an update on how we open up, and then once I see that S&T, that's when I'll go ahead and give you guys an update on whether or not I take a trade. And I'm anticipating, like I said earlier in the stream, with this week, I'm anticipating there to be some early volatility. So basically from Monday to Tuesday, I'm anticipating a run up into this fair value gap right here. I'm anticipating a run up into here, right, to start the week off. So between Monday and Tuesday, and then Tuesday, basically all day Tuesday is where I would like want to wait to see. Basically between Monday night and Tuesday morning's London session, this is where I would want to see like an S&T form. So all of Monday, from market open tonight on Sunday and all the way through Monday. I'm anticipating some type of run up in here, some type of run up to the fair value gap. And then once we get there, then I wait to see if Monday night and Tuesday and early Tuesday morning, if we have that SMT, right? So I think I'm gonna go ahead and end the stream here and just, all right, because I've already outlined you guys what I think is gonna happen for this week. So I can only really, basically I'm gonna wait till like when I see the SMT happen, that's when I go on stream again and then show y'all basically if I'll enter a position on the demo account that I have with TradingView. I'll just enter a position on the demo account because I'm not trading until February. So everything right now is just practice and journal, right? So I'll let y'all know on Monday night if, depending on what I see, if I see an SMT happen, I will hop on another live stream and show y'all me entering a position, and then update if I do enter a position, or whenever I do it, I'll go ahead and show you guys my exit also for that week, because I look to try to be out potentially Thursday or Friday. And then especially since we got NFP Friday, you know, I definitely, if I do take a position by Tuesday, I want to be out by like Thursday, either Wednesday or Thursday, depending on how much we run. And I'll just use my discretion and like close the trade then. So, but until then, if you guys really stuck around, I appreciate it. You know, I hope you guys enjoyed seeing like how I look at the market. I hope I gave the best, clearest description that I could, or instructions that I could, as far as like following my entry model. I hope I did that. If not, I promise I'll get better. But yeah, I appreciate you guys for tuning in to episode 1, and episode 2 will basically go live next week, because the next videos it'll basically just be updates on what I did over here in the stream. So stay tuned for that. If you guys enjoyed this, please subscribe to the channel, like the content, and turn on the notification bell so you're notified whenever I do another video. And that's actually going to help as I do updates throughout this series. So peace out, y'all, and I'll see y'all in the next episode. Peace out.